Hey, what is going on, guys? My name is Nick, and in today's video, I'm going to be sharing the top 3 US Cannabis ETFs to buy and hold before federal legalization occurs, which could be right around the corner. Now, before we get into it, if you haven't seen my last video where I talk about the pros of investing in the US cannabis industry, you'll definitely want to check that one out first, and then this one will make a whole lot more sense. But anyways, I'm incredibly bullish on the US cannabis industry over the next decade based on all of the growth that we've already seen thus far and the upside potential that is yet to come. And of course, one of the safest ways to gain exposure to a growing industry like the cannabis industry is through investing in an ETF, or an exchange-traded fund. In 2019, legal US cannabis sales were $12.1 billion, while in 2020 alone, they grew 46% to over $17.5 billion, and this is just ridiculous. Meanwhile, if we take a look at the legal cannabis sales worldwide, they were $21.3 billion, so this means that the US cannabis market share was 82% of global sales at the end of 2020, which could present an excellent opportunity for investors to take advantage of these US cannabis stocks. Furthermore, industry analysts think that the US cannabis market could over double by 2025 to $41.5 billion, and that would represent a compounded annual growth rate of 21%. So with this type of industry growth, I definitely want to take advantage, especially considering the discount that we've seen in the stock market lately. So with all of that said, I'll be sharing 3 of the best cannabis ETFs to buy and hold for the long term. And all I ask in return is for you to smash that like button on this video to help support my channel. It really does help out, guys. And if you haven't already, definitely consider subscribing for more investing content just like this video. But without further ado, let's jump right into this. Alright, so the first ETF that we have on the list here today is the Amplify Seymour Cannabis ETF with ticker symbol CNBS. No, I'm not talking about CNBS News. Oh wait. Did I say CNBS? I meant CNBC, that's my bad. Anyways, CNBS is the most broad cannabis market ETF that we're going to be discussing today. That's because this actively managed fund invests at least 80% of its assets into companies that generate at least 50% of their revenues from the cannabis and hemp ecosystem. So as you can see from this breakdown chart, this could include cultivation and retail sales of cannabis, agricultural tech and real estate for the industry, and consumption devices along with tech and media. So basically what that means is this ETF doesn't just include the producers of cannabis, it spans across many industries. Additionally, this ETF allows you to diversify across both Canada and the US if you aren't fully comfortable putting all your eggs into one basket, and then a small portion is actually based in Ireland and Israel too. Taking a look at the size of the companies in this ETF, we can find over 52% are mid-cap, meaning that they are between $2 and $10 billion in size, which is very typical for most of the top US multi-state operators, or the MSOs. And so far over the past year, the fund has performed very well, being up over 68%. But as you can see, it is down in 2021 ever since Joe Biden was elected for president back in about February. Finally, we need to talk about fees. And because this is an actively managed fund, it does have a slightly higher management expense ratio, or MER, being 0.75%. But considering all of the gains that you could be seeing in this fund over the next decade, it's pretty insignificant. Overall, guys, I would say if you're looking for a very broad market cannabis ETF, which spans more than just over the US market, and then more than just the cultivation and retail portion of cannabis, then this one is definitely for you. But now let's move on to the second ETF of the bunch, and that would be the Advisor Shares Pure Cannabis ETF with ticker symbol YOLO. Now, don't be deterred by the ticker symbol because you're definitely not just YOLOing your money away. Anyways, YOLO actually became the first actively managed ETF with dedicated cannabis exposure in the US, so this management team definitely has a lot of experience and they were the first to the market. This ETF is more focused on the US market than the previous ETF, with an exposure of about 61% and then only 29% in Canada, as there is an increased global exposure within the UK as well. And just like with CNBS, this ETF definitely focuses on many different areas within the cannabis industry, not just the producers. For instance, the largest holding, Village Farms International, is a 15% weighting in this ETF and is one of the largest vertically integrated greenhouse growers in North America that has just recently moved into the cannabis industry through their subsidiary. Then we have the second largest holding, Innovative Industrial Properties, being a REIT that focuses on providing real estate to the medical cannabis industry, and needless to say, it has done incredibly well over the past 5 years. Now, in terms of the size of the companies in this ETF, again, we have about half of the holdings in this ETF being mid-cap. then 25% small cap. So basically the majority of the holdings in this ETF are smaller than a market cap of 10 billion. Now jumping into its performance, over the past year, YOLO is up about 42%, which is pretty good, but quite a bit lower than CNBS. However, because of the recent drop, this could be a very good opportunity to start buying into the ETF for the long term. And finally, as for the fees, this is another actively managed fund, so it does have a relatively high MER of 0.75%, but again, over the long term, this is probably going to be insignificant based on the gains you might see. Overall, this is a great ETF for broad cannabis industry exposure, as well as real estate within the cannabis industry, and it has more of a focus on the US than Canada, so you definitely get that weighting skewed towards the US as well. Finally, guys, let's jump into the third and my favorite ETF of the bunch, which would be the Advisor Shares Pure US Cannabis ETF with ticker symbol MSOS. As you can probably tell from the ticker, this ETF is highly concentrated on US multi-state operators, which are abbreviated as MSOs, and these are the largest cannabis companies across the United States. Some of the MSOs you might recognize in this ETF are Green Thumb, Curaleaf, Cresco Labs, Trulieve, and Planet 13. And this ETF is actually designed to have a heavier weighting on the bigger MSOs, meaning that their market cap is a lot larger, so then the smaller ETFs that are a little bit more risky are going to have less weight associated with them. Moving on to the performance, this ETF is up just over 32% in the past year, but it has definitely fallen quite a lot since February, just like the other ETFs. And although the performance of this ETF is the worst among all of the 3 ETFs I've talked about, I still would personally enjoy this ETF the best because I think it has the highest upside potential, being purely focused on the US market. And I personally find these prices incredibly attractive for this ETF, considering that these MSOs have been growing their revenues like crazy over the past year, and in some cases profitability too. For instance, if we take a look at Trulieve Cannabis, which is a 10% weighting in this ETF, they grew their revenues 78% year over year and net income 116% year over year, which is nothing less than remarkable. Now, of course, not every MSO is profitable, keep that in mind, but they are all definitely growing their revenues at a very rapid pace. And finally, since this is an actively managed fund, it does have that higher MER than other broad market ETFs, being 0.74%. Overall, this would have to be my personal favorite ETF of the bunch because it is purely focused on the US market, and this is where I can see the majority of the growth coming from in the future, because Canada's already legalized and the US hasn't, so once that legalization comes into play, I can see a huge boost in sales in the US. Not to mention too that the US MSOs are generally a lot better managed than the Canadian counterparts, which are the licensed producers, so that definitely gives them an edge up. So yeah, if you're wanting to invest in the US cannabis industry purely, this would be your #1 pick. Anyways, the 3 ETF ticker symbols that I discussed today are CNBS, YOLO, and MSOS, which in all honesty should be pretty easy to remember. The first 2 focus on the broader cannabis industry, which would be the producers, the consumer products, and real estate across both the US and Canada. However, MSOS focuses purely on the US cannabis industry with a focus on MSOs, hence the name, and this would be my personal favorite. So if you want to gain easy exposure to the US cannabis industry before legalization eventually comes around, which could be in the next few years, we have no idea. Anyways, these would be my personal picks. Overall, if you did enjoy this video, don't forget to drop a like as it does help support the channel. And as always, if you haven't already, definitely consider subscribing for more investing content just like this. And I will see you guys in the next one.